Let's move on and talk about great news. Some great news here that more working class Americans than ever before are in the stock market. That does sound like good news, but when you dig a little bit deeper, it's rather scary. I mean, 54% of Americans with incomes between $30,000 and $80,000 have taxable investment accounts. There are several reasons for this, like no more commissions for trading stocks, those are gone. The excitement of investing on certain social media sites. I mean, gosh, some of these sites, they just rant and rave about stocks, and they're not good stocks, but
You have the whole Reddit movement.
there we go. Yeah.
Wall Street bets, yeah.
They're out there. And it's so easy to trade stocks now. I mean, if you got a cell phone, it's right there in their hand. You can do it anytime that you want to. Like, oh, yeah, I'll just do a trade right now. I mean, so that's why there's so many people doing it.
Yeah, and it's kind of funny, right? There's an old saying out there that when your barber starts talking to you about stock tips, that is the peak of the market. And I go to a barber, and he always asks me for advice. He hasn't given me any hot stock tips.
Oh, wait till he starts giving you the tips.
Then I'll know we're in for something problematic. But it does seem that we kind of are in that space today. As you talk to so many different people, and they all have these stock tips, but no real concept of why they're investing in these things. And these investors have only been investing for probably the last 5 years and have not experienced really any long-lasting declines or turmoil in the markets. It's all been pretty rosy lately. And the thing I always look at is it just seems like anybody you talk to owns NVIDIA. And that is always something that scares me. I don't know anything about stocks, but yeah, I bought some in NVIDIA. It's like, it's a little troubling.
And again, we got to say, congratulations, you've done well. But, it's gone throughout history. I mean, in 1929, remember the 70s, then we had the tech boom and bust. It continues to happen. And many of these investors are simply trading stocks and don't understand the fundamentals of investing for the long term. Some of them have experienced very good returns. Again, congratulations. Not because of any specialized knowledge, but because of the luck of picking some high flyers that have done well for them in the short term. They think they have something there. Again, I'm sorry. It's just luck. You have no specialized knowledge that, these are going to do great.
Yeah, and I mean, that's the big issue that I see with people is you kind of get this false sense of confidence, right? Because you're doing it and, you talk about maybe the S&P, right? And I'm beating the S&P. I'm making like 20, 30% per year, which is possible that, there's people out there that have picked the right high flyers for the last couple of years. I was talking to a friend's brother, and he was like, "Oh, this guy knows what he's doing. He got in on CoreWeave, and now he's in on the quantum computing stocks, and this guy knows." And I'm like, "Well, CoreWeave came out like what this year?
Yeah,
so
I think a few
he
months
knows,
ago,
right?
right?
And it's this thing that these guys know because they made money,
right?
And the issue is, you're right. The market can be so crazy for a short-term period that all of a sudden things flip. And it comes out these investors really didn't have an idea of what the earnings or the debt for the stocks that they were trading was, and it creates these problems. And they just continue to make money as they buy and sell. But I mean, it's just such a shame because, again, you can make so much money in the short term, but you can turn around, kind of like we talked about with gold, and lose everything.
Yeah.
If you keep on this risky path, you can lose everything. And it's just such a problem for young investors because, there's people at 25 to 45 years old maybe, they could make the big mistake of missing out of years of compounding. I mean, if you just make a decent return over a 40-year period, you're not going to fail.
No.
You're going to do very, very well. But the problem is people, they want to make that quick hit. And that is what keeps them coming back. And then all of a sudden that quick hit turns into complete failure.
I read something the other day, too, about this one investment manager. He's like in the top 3 for the long term. He's never been in the top for the short term because what happens if you're in the top for the short term, you're many times on the bottom the next time. So he just, like we do, plod along, make the nice thing because we are worried about where you'll be in 15, 20 years because this is for retirement. Again, if you're gambling, having fun with it, fine, go ahead. You'll probably lose money. But it's the same thing. Like I heard the same thing back in the tech boom. Like, oh, yeah, and this guy's so great because he picked this one, he picked that one. I think it was a week or two ago we talked about how a lot of the companies that laid the fiber optics for the internet, they all went bankrupt. But over my 40 plus years of working in the investment industry, I've heard the same story many times and it never turns out well. When you try to help them understand how things really work in the investment world, they justify it with what they're doing with such statements as, well, Brent, you don't get it. This time it is different. I wish these young investors would understand that investing in stocks and earning a 10% annual return per year is very good. I mean, that's double what the safe return is, more than double the safe return of the 10-year treasury. I'm sure many who read this or hear these words I speak think I have no clue what they're doing, and they have some specialized technique, and this can't fail. You don't understand what I'm doing. I've got the secret.
We've heard that many times.
Many times.
And again, the thing that I think people miss is short term could be 5 years.
Yeah.
Short term could be 10 years. You could have a very successful trading career, I'm going to say, for 10 years. But that is short term because many times you should be investing for 40, 50, 60 years. Yeah. And again, you have a great 10-year period, but then you have a now next 10-year period where you lose everything. That's not good.
Not good at all.
So again, that's where that strategy and implementation of investing in good, sound businesses for the long term, which is, again, 20, 30, 40 years, is so much more valuable. Because when that day comes, I'm going to say that reckoning comes, when things do shift back to a more normalized period, again, which it will, these investors will be left with a small amount of capital and then not much time left to invest because they're now older and closer to retirement. Only then will they realize that their risky trading strategy proved to be nothing more than gambling. And I don't say I love to have this conversation, but it seems to be that I have this conversation more often with clients. They're like, well, my grandson's doing great, and he got into NVIDIA, and but it's good. He can take those kinds of risks. And I always ask people, I'm like, well, why can't you? Oh, my risk tolerance is low. Why is your risk tolerance low? I did this crazy thing back when I was younger. And it's so funny because this whole concept of risk tolerance and young people being able to take these high risks, the reason that people when they're older have lower risk tolerance is not necessarily because their appetite for good investments has changed. It's because they realize that doing risky things ultimately many times leads to you losing money. If everything was easy when it came to high risk, people would do it, but it doesn't pan out that way.
Yeah, the experience that they have is what actually happens, and that's why it's so important to understand this. And investing is for your lifetime. And you may think, well, I'm just a short-term investor, but you will be investing for your entire life to grow your net worth. We talk about growing. We talk for our clients generational wealth to grow for the family and stuff. I mean, that's what you should be doing. And yeah, if you want to take a high flyer and buy a few shares of, the next hot quantum stock, whatever, I wouldn't do it because then you lose effective compounding. But you can do that. But just make sure what you're putting away on the safe side is growing, and maybe have fun time gambling. But actually, it's so easy now to gamble on sports. Just gamble on sports. You probably have the same odds.
Yeah, and then even then pisses me off. I was just in Vegas this last week, and I lost $130.
What?
Gambling on the my sister-in-law's boyfriend talked me into doing a bet, and I was like, okay. And then I'm like, you know what? I'm 0 for 3 on these sports bets. Why do I do this? And it's like $100, right? Like you said, go gamble on a quantum stock. But why would I do that? Because I get pissed off when I lose the $100.
Yeah. I'd rather grow my money at 10% per year on average over the next 40 years than have this year we did 100%. Next year you lose 50, and then it takes 100% to get back to break even. I mean, you get in these modes when you understand compounding, you understand investing. That's why you and I don't do it. We understand the game. And a lot of people think they have a whole different game to play, and they're not.
You know why I think I get so angry when I lose money gambling? Because I look and I'm like, I knew I shouldn't have done it. Like, but there's that what if scenario. And I think it's the same thing with stocks, right? If you buy something and it goes down 80% and you're like, I think it's so frustrating because I knew I shouldn't have done it. Yeah. And I think that's why you and we don't gamble on stocks, because we know better. And then it's like, I would just be so mad at myself if all of a sudden it goes down 90%. I'm like, I knew it. I knew that was a bad idea.
Well, and I used to love playing in Las Vegas, the $5 blackjack tables, because I could stay there for a while and not lose too much. Now you can't find anything under a $25 table.
I think you got to go to Old Vegas. I think they still have them there.
Yeah, but
maybe I haven't been.
Maybe, yeah. I like the nice hotels, so I'll just go to the shows.